Everyone, boy, do I have a live stream for you today. While the whole world is distracted by what's going on with Israel and Hamas, with Israel and Gaza, also still the conflict that's going on with Russia and Ukraine, global banks around the world are in full panic mode because there's an old saying, when all else fails, they take you to war. And people, the global economy is about to enter a severe recession, if not depression. The banking system, unlike they're telling you, is still collapsing, and they actually acknowledge it in this emergency meeting. And inflation has a huge risk of surging again. So we need to break down the truth, the facts, the data, the news, what's really going on. And this is a massive, massive report that came out from this meeting, and there's actually 9 key takeaways that I took from this meeting. So we're going to go from the first key takeaway to the 9th takeaway. So you're definitely going to want to watch until the end to get all those key takeaways, because these people, you can take what they say, read between the lines to figure out what's about to really happen. So everyone, without further ado, let's get into it. So look at this. Key takeaways from the IMF, that's the International Monetary Fund. For people that don't know who they are, they're pretty much the banks for the banks. These are the institutions that really run the world. These are the ones that fund governments. These are the ones that when a government goes bankrupt, they run to the IMF. These are the ones that fund the wars. These are the most powerful institutions in the world, not the elected officials. They change, every 4 years, but these people are the ones that are really calling the shots behind the scenes. So again, what are these key takeaways? Now I'm going to do something a bit different today, because what I've found as I've read these articles is there's a lot of fluff. There's a lot of the, for example, CNBC's take on everything. But I've just gone ahead, researched intensively all these articles, researched the meetings, and I've got 9 key takeaways to tell you what's about to happen to the global economy, and also some stats and statistics to show you as well. So I'll go ahead and adjust this also too, so that way it's easy to read, because when you see these articles, sometimes they're very, very hard to read. So if you just had one paragraph here you can focus on, it makes it a lot easier. So first things first, they're talking about the global economic outlook. Now, what happens with them is they'll put out a prediction, okay, this is what we think global growth will be. But I don't know if you've noticed, they'll put out a prediction, okay, it's going to be 3%, 4% global growth. But then every time they meet again, they lower it and lower it and lower it. And I think what they're not really going to admit is we're going to head into a global recession. So let's get into this first takeaway. So the IMF predicts a slowing of global economic growth rates. So they admit the global economy is not looking good, okay? With growth expected to decline to just 3.5% last year, from 3.5% last year to just 3% this year, and 2.9% next year. Now, this takes into consideration economies, very weak economies that may all of a sudden boom 30% because their GDP is so low, it's a lot more volatile. I think global growth is going to be much lower than this. But listen to this, what they said about inflation. Inflation is also expected to decrease from 6.9% this year to 5.8% next year. Now, that's still very, very high, everyone. And we're going to get into a moment what this means for the banks. But if global inflation is still 6%, well, interest rates are going to have to stay high for much longer, or the unthinkable could happen. They may have to lift them even higher. They say, although it remains relatively high, there's hopes, again, they're hoping and praying that central banks may end interest rate hikes to manage inflation without causing a severe economic downturn. Now, people, this is a complete fairy tale. There's no way that unless central banks cut interest rates aggressively right now, that we're not going to have a severe economic downturn. Now, the reason why we haven't felt it yet is because there's huge lags effects. But what we're already seeing right now is credit card and auto loan delinquencies are hitting record highs, corporate bankruptcies are hitting record highs, and layoffs are starting to happen in the labor market, but it's just that it's going to take a little longer for the labor market to be hit. And the labor market is really the last stand for the global economy. Once the official unemployment rate goes up, the real unemployment rate is at least double the government figures they put out. That's when we're going to see things really starting to hit the fan. So if they think that all these interest rate hikes aren't going to cause a severe economic downturn, they're dreaming. Did you know every single time the Federal Reserve has gone on an aggressive rate hike cycle, every single time there's always been a recession? And we did have a recession, but Joe Biden just changed the definition of a recession, okay? They've never, ever been able to do a rate hike cycle to bring inflation down without a severe recession. Now, also at the same time, the M2 money supply is collapsing at its fastest pace ever. So that's the first key takeaway. Let's go into the second one, which is they go over what's happening right now. So number 2, the impact on the Middle East conflict uncertainty. Now, a lot of the markets hate uncertainty. Right now, the markets seem to be quite bullish because they think, wow, they're going to be funding another war. They're going to turn that money printer on, money printer go burr, and the markets, Wall Street seems to love war, especially the defensive stocks. So the ongoing conflict between Israel and Hamas has added uncertainty to the global economic outlook. Most experts agree that it's too early to determine how this conflict will affect the world economy, which is described as limping along. So that's exactly right. The world economy is just limping along right now. And I think inflation and this new conflict that's happening in the Middle East may find that, the economy that's limping along, and it may go ahead and kick the legs out from underneath them, and the world economy will completely collapse because there is so much uncertainties, and things could change within a second with this conflict. The tensions are so high. Israel is getting ready to do a ground incursion. They're getting ready to go into Gaza, and Hezbollah, which is at the north of Israel, they're much more powerful than Hamas. They're saying, look, if you go in, we're going to fire our 150,000 missiles at you, which is much more dangerous. Thanks for that super chat, the $2 super chat. They're much more powerful than Hamas, and Israel needs to be much more worried about them. At the same time, Iran just put out a warning to say, if you go into Gaza and you annex Gaza, we're going to fire on you as well. At the same time, the U.S. military just sent in another warship. The British Navy has sent in a warship. At the same time, there's reports that the U.S. is readying 2,000 troops to get boots on the ground in Israel. And people, things are so volatile, we could literally get the announcement tomorrow that World War III has started. So even though the markets are thinking, wow, this is great because we're going to print much more money, well, things could change very, very quick, and be very careful what you wish for. This is the last thing I want. I don't want World War III. I think, at least Israel has given it about a week to really think about if they want to go in or not, because again, this could lead to the unthinkable. Now, like I always said, if World War III does start, well, guess what? They're not going to care about inflation. They're going to print money like crazy, and we're going to go into a moment, the IMF report on debt, and they will sacrifice the living standards of the middle class to keep funding this war. And if that does happen, well, we'll see a market melt up. But we're yet to see that's going to happen, because look at this, debt concerns. Heavy debt burdens in advanced economies, including the United States, China, and Italy, were a recurring topic at the meeting. That's exactly right. Do you know what just happened over the past month? The US government debt increased $500 billion in just 20 days. That's right. $500 billion was added to the US government debt in just 20 days. This is completely unsustainable, everyone. Yes, they can kick the can down the road for a little bit, but the road doesn't go on forever. Eventually, we're going to have hyperinflation or the dollar collapse, okay? They can't just keep taking on trillions and trillions of dollars and more in debt at the same time when interest rates are at record highs. Debt was much lower in 2007 when we had the 2008 financial crisis, where now we have much more debt and much higher interest rates. So the US government, why they're trying to fund this conflict in Ukraine, now they're going to be funding another one in Israel. I think the US government is going to get another debt can't speak this morning, debt downgrade, and they're facing default. Okay, they're spreading their resources very, very thin, and this is very, very dangerous for the US. Okay, so also financial markets have recently pushed US bond yields higher, which again making the debt more expensive, causing concerns among investors. Some experts suggest that the era of relative, listen to this is big. Some experts suggest that the era of relatively economic calm before 2008-2009 financial crisis, known as the Great Moderation, may be over. That's a big statement here. The Great Moderation is over. We are heading into a very, very unstable world, a very volatile world. And what we've seen has been, the status quo. Every single time, there was something bad in the financial system happen, or every time we had a recession, they could just print their way out of it. While the US government is so in debt, all these global economies, they've already used that tool. They've already shot that bullet, okay? They've already used that. They can't keep doing that forever. So when we had this next recession, they're not going to have the firepower to get us out of it like in the past. So it takes us to our next point, climate change. So yes, while we're facing World War III, while we're in a recession, while we're in a cost of living crisis, they want to talk about climate change. I think this is the last thing on people's minds. I don't think people really care about their gas stoves creating, CO2 emissions, carbon emissions, when we're worried about World War III, recession, and economic collapse. So the fight against climate change was discussed with concerns that its current subsidies-based policies are insufficient to achieve net zero emissions. Well, I think it's time to forget about that for now. I don't think we need to worry about that. We need to drill, baby, drill, like a wise man once said. Get some cheap oil, and we need to refill our strategic petroleum reserves, because what happens is this turns into a global conflict and China gets involved. So, okay, scaling up such policies could lead to a significant increase in public debt. That's right. The US government's already bankrupt. They can't afford to fund this as well, prompting the need for a new mix of policies, including carbon pricing. Geez, people, I'm hoping that, this will get kicked to the curb when people really understand what the real issue is here. Now, next, number 5, debt deals and reforms. So what we've seen happen over the past year is the dollar has been surging. Now, while that's good for the US, it creates disinflation or makes inflation not as bad in the US. All other countries, like for example Australia, the Australian dollar is absolutely tanking. That have debt in US dollars that have borrowed from the US government. Well, now they need to print more of their currency to repay the debt, and this is going to lead to a foreign debt crisis. So various countries are dealing with debt-related challenges. Turkey is focused on bringing down inflation, while Kenya plans to buy back a portion of its international bonds to avoid debt distress. Zambia reached a debt restructuring agreement with creditors, including China and France, and progress on Sri Lanka's debt situation remain uncertain. That's very, very true. Next, financial stability risks. So this is huge, everyone. This is what I'm going to talk about, the banks. What we have right now is a complete bank Ponzi. They take your money and they go ahead and lend it out multiple times, up to 10 times, sometimes even more. Then they create these derivatives and they leverage your dollar up to 100 times with all these derivative, I can't even say derivative products, okay? And the world is waking up to the banking Ponzi scheme that it is. It's literally a Ponzi scheme, okay? It needs more and more deposits coming in. It means more and more people taking on more debt to keep on going. Well, they've made a huge statement in this report of how many banks face failure if interest rates don't get cut and get cut quick. So the IMF warned the high interest rates could put some borrowers in precarious positions. Listen to this. This is huge. About 5% of global banks are vulnerable to stress if rates remain high. And this is even bigger. An additional 30%. That's right. 30% of banks, including some of the world's largest. That's right. 30%, including some of the world's largest, would be vulnerable in a prolonged period of low growth and high inflation. Now, why this is so huge? Because like I said, banks would be lucky to have 10% reserves, okay? With the amount of assets they have on their balance sheet, with the amount of cash they have compared to all the money they've lent out, okay? And compared to all the people that have their money in the bank. If just 10% of the banks went down, we would see the biggest financial crisis we've ever seen in our lifetime. It'll make 2008 look like cakewalk. And because there's so much more money in the system, there's $18 trillion worth of US commercial deposits, and the FDIC only has enough to cover 1.5% of those, okay? And the US government can't just print $18 trillion like that, okay? It would create huge hyperinflation. So they're saying up to 30% of banks could collapse if we continue to see low growth and high inflation. And I don't know about you, but it seems like we have low growth and high inflation, okay? Now, guys, just want to make sure that you guys can hear me. Can you type 1? I just want to make sure I haven't been speaking this whole time and you can't hear me, okay? Just type 1 if you think the audio is good. All right, sweet. Okay, we'll continue. Next, geopolitical tensions, okay? I think we all know the big geopolitical tensions that's happening right now. So geopolitical factors such as Ukraine war, trade protectionism, okay? We saw what happened with the supply chains during COVID. Now a lot of countries like the US with their chips production, okay, they're wanting to bring a lot of those essential chip production or essential things that they need for their country. They want to bring that production back into their own country, which is a good thing. It creates inflation in the short term, but over long term, it'll be more productive for the country. So now this is huge. Tensions between the United States and China. And this is something I've been thinking about recently. What happened, the reason why the British Empire collapsed is because they spread their military throughout the whole world. They got in so much debt to fund all these wars, okay? They were spread so thin that when they were attacked, they had to, abandon all these posts and try to protect the empire. And I think the same thing is beginning to happen in the US. They've got so many military bases throughout the whole world. It's costing so many trillions of dollars to fund the US military. Now they're involved. They're depleting all their ammunition. They're depleting all their oil to fund the Ukraine-Russia war. Now they've announced that the Senate is going to push through emergency aid for Israel versus Hamas. The US is going to be depleted. And China, I think, is going to be sitting back, biding its time. They could either take Taiwan in a year or two, but I hope that doesn't happen. But then it gives them a lot more leverage in all these trade negotiations that's going on right now. So US is very, very vulnerable right now. So they're making consensus building more challenging. The meetings did not result in a usual final communique. So also the IMF and World Bank reforms. So, okay, this is where we get to see some big shakeup in the way the global banking industry goes, okay? And there's a lot of conflict because we're seeing China starting to get a lot more influential with the IMF compared to the US. So there was a discussion about revamping the IMF and World Bank to better reflect the emergence of economies like China and Brazil, China and Brazil. So again, China and Brazil getting much more influence. A US proposal to increase IMF lending power and review shareholdings later gained broad support. Shareholdings. So that's right. All these central banks, all these big, powerful institutions, they're not public, they're not federal. These are private banking institutions that have shareholders, okay? And who are the shareholders? Well, they're the biggest powerful commercial banks in the world that are actually shareholders that are profiting off these wars, that are profiting off these conflicts, okay, at our demise. However, details about changes were limited. So they're trying to keep it hush-hush. What exactly are they changing, everyone? I don't think they're changing things for the betterment of the people, okay? So I think we're going to get some announcements very, very soon, or some details. What exactly was changed? When a big bank institution does a big change, it's normally not for the better. And anti-poverty groups remain skeptical about the outcomes of the meeting. So even the anti-poverty groups remain skeptical. So that leads us into our ninth takeaway from this. At this time when the US government is going broke, when all these the Western countries are going broke, there's more and more demands for more funding by these other countries. So it said lack of new funding. So despite discussions about the need for funds to address poverty and climate issues, again, climate issues with all that's going on in the world right now is their biggest issue apparently, there was no indication of new financial commitments or funding agreements. So everyone, what this simply means is the global banks, they're very, very worried. They know that the global economy is going to tank. Okay. They know that the impact of the Middle East conflict is going to create huge uncertainty and could really escalate into World War III very quick. They know that there's so much debt with a lot of Western countries like the United States that they're in a very dangerous position. And they're trying to scramble to do more and more debt reforms with all these other countries that are collapsing because they can't afford to repay their debt. They said themselves up to 30% of banks face failure if growth slows and inflation stays high. And they're now doing some very, very secretive changes at the IMF and the World Bank. So everyone, you definitely need to wake up and prepare and start paying attention right now. I think a good play will be having some gold, having some silver, because they are a safe haven. If we do see a market melt up, they'll go up. Bitcoin will go up as well. That's why I have Bitcoin in my portfolio too, to protect against, that's a safe haven. But if there is a huge market melt up, if central banks cut interest rates to monetize the debt to fund these wars, then Bitcoin will go up as well. So, but what do you think about all this, everyone? This has been my report. Thanks for watching. You're awesome. I'll see you all in the next video.